Hello everybody and welcome back on my YouTube channel. Long time no see, I know, but let's get right into today's topic. And today I want to talk about dividend paying companies versus dividend companies that don't pay out a dividend. What do I prefer and why? So to be honest, when I started investing about three plus years ago, I was pretty much focused on dividend paying companies because I like this passive income train of thought. I like to see my direct results, but for more reasons. Wait a second, we're getting into that now. But I was never the kind of guy that said, okay, just because this company is not paying out a dividend and I like this company, but solely for this purpose I'm not investing in it. I was never that kind of guy. And so I'm sitting right in between. And to be honest, the year 2020 also told me at least, my personal opinion, it really does not make sense to not invest in a company that you think is doing great and especially will do great in the future, but they don't pay, but because they don't pay out a dividend, you're not investing in it. Yeah? Take Amazon, take Alphabet, take Netflix. Yeah, if you weren't invested into those companies, these not dividend paying companies last year in 2020, you would have missed out big, and those were the companies profiting the most from COVID. And of course there are Microsoft and Apple that pay out a small dividend return, but generally speaking, I think we can all agree on that tech companies are not the classical dividend companies. So, and there you would have really just missed out on great returns in times that other traditional dividend paying companies like Shell, oil companies or other energy companies didn't do great. You would have missed out big just because you had this mantra of I'm only buying dividend companies. So, but I'm not bashing dividend companies here. As I said in the beginning, I was very much focused on it, and I still like it. And let's first talk about, however, why this strategy of buying dividend paying companies is often criticized. It is criticized because many think that, or it's actually true, people don't just think that, dividend paying companies or dividends are not really favorable in a tax sense of view. Because whenever a dividend is paid out, you are directly taxed, and this taxed money then you have to give to your government is not helping you anymore in getting the snowball rolling. On the other hand, of course, when you invested for 30 years and you want to cash out, then of course more of the invested capital is already taxed, and therefore your tax bill in the end is going to be lower, but it's preventing, or it's slowing down the snowball a little bit. I can't really tell you, and it hugely depends on your jurisdiction, on your country, on your legislation. But to me, there is a difference, but it's not big. So I would guesstimate that this dividend strategy is maybe 1 or 2% slowing down the snowball. So it's not 10%, but you have to calculate that for yourself. Just be aware of that. And another thing you should be aware of is, I would assume you know that if you watch this channel, but let's make that sure. Dividends are no free lunch. When a company is paying out a dividend, then the stock price decreases by the dividend they pay out per share. Therefore, you already see that with dividend paying companies, your pure price gains are going to be lower. Yeah, and therefore with dividend paying companies, your annual returns will be made up of dividend return plus price gains. Yeah, dividend return somewhere around 2 to 4%, price gain then of course another 3 to 5%. So dividends are no free lunch. That's important to note. Yeah. So then now let's talk about why I still like dividend paying companies. I like the dividend strategy. Main reason actually is this passive income philosophy. Yeah. Then talking taxes, in some jurisdictions like in Germany, in the beginning of your investing career, it's actually favorable to start with distributing ETFs or dividend paying companies in the beginning, because you can max out your tax-free sum every year with these dividends, which you can't really do with, it's not really true anymore, but which you can at least better do with dividend paying companies than with accumulating funds or with companies that don't pay out a dividend. So yeah, because we talked about taxes, I also have to mention this, but generally it's true, tax-wise, non-dividend paying companies are a little bit advantaged. Okay, so I like we as humans, we are not calculators. We are no machines, and we have often a lot of psychology at play here. Yeah, and what I really want to get across is, for the last 10, 12, 13 years, stock market, except for COVID, has gone like bonkers up for the last 10 or 12 years. Yeah, there was no real downtime. Everybody is up, and everybody who has been in the stock market only for the last 10 years has never seen a big crisis or a longer ongoing crisis. COVID was the exception in terms of crisis, in terms of stock market crisis, not how it's generally looking. Yeah, it's generally not the case that the stock market recovers within half a year. Yeah, generally not the case. And if you now look back in time, yeah, you will see that in the dot-com bubble crash from 98 to 2002, yeah, from 98 to 2002, the stock market was falling. Not just not recovering, falling for 4 straight years. Now, put yourself into the situation and ask yourself, would you have been able to still hold on to your shares? Yeah, because at least I guess already after half a year, it's no fun anymore to monthly put your savings into the stock market and see your net income, net worth going down for 4 consecutive years. And then it took another 3 to 4 years, or even 5 years, to recover. Yeah, so then the markets were on their all-time high again in 27, 28, slightly only at their all-time high, and then the whole thing crashed down again. And then it was going down for another 2 years at least, and then you saw recovery in 2011, maybe 10, depends on the actual stock you're looking at. Yeah, put yourself into the situation. You are investing monthly, you put your part of your salary into your brokerage account, put it into a savings plan for an ETF or any company, and for 4 straight years, or let's say even 2 straight years, the whole thing is only going down. And in this scenario, which in my point of view will happen again, yeah, it's been happening multiple times in the history, and it's part of investing in the stock market. The thing is just that people are not used to this, that only got in the last 10 years or 12. Put yourself into the situation, and in this situation I think it really helps to have dividend paying companies that still pay you dividend, because guess what? Yeah, also in 2001, where stock market went down for the whole year, Coca-Cola was selling Coca-Cola, and probably they weren't even selling less Coca-Cola than before, meaning they were still holding up their dividend, or maybe even increasing. Probably, very likely, they even increased their dividend. And so, as a dividend investor, or investor in dividend paying companies or ETFs, you still have this passive income stream to hold on to, and to still build, even though the whole market is going down. You can say, okay, then I'm not so much focused on the charts and on the stock market prices. I'm solely focusing on getting my passive income stream, my dividend stream up. Yeah, and you could still do this, and you were still rewarded for your efforts that you took in before, while the whole market was going down for 4 years. Yeah, and I think one should not underestimate the power of this psychological trick. Yeah, and then so what kind of swings is connected to that is, the good thing about dividends is they are really connected in 98%, let's say, connected to reality. Yeah, companies can only pay out dividends that they truly earned, that they had revenue and then they made profit with. Yeah, companies can't pay out dividends just because the general public believes they have a great future ahead. Yeah, that's not how it works. And also in the other way around. Yeah, look at the oil companies. Yeah, public says they don't have a bright future ahead, but today they're still making money, and that's what you see in their dividends. So I like this connection to reality. Yeah, because what's really just counts is, are they selling their products or not? And if you look at some astronomical valuations of some other stocks, that's really puts you onto the ground again. Yeah, because I think you got what I said. And yeah, I think this psychological effect is pretty nice, and I think it will become important again. And then also, if you think about, now you're 20, now you're 30, in 20 or 30 years, when you start to think about retirement, hopefully, with dividend paying companies, or if you have mostly invested in dividend paying companies, your passive income stream is most likely of an pretty well sized, and pretty likely, or maybe you can live off that. Yeah, and the good thing about that is, if you use dividend companies or distributing funds to fund your life, then to finance your life when you're in retirement, is you don't have to think about, am I selling today, am I selling tomorrow, how much am I selling, is the market going up, is the market going down, because that's what you kind of have to do with accumulating funds or not distributing companies. You have to sell stock in order to finance your life when you are retired, and that really puts the timing issue into your hands. And yeah, even if the market goes down, yeah, you will have to sell parts of your stock, and that will really hurt, because when the market goes down, you still have the same cost of living, you're selling more shares, and with dividend paying companies there, you at least know the company is still earning at least this dividend that they're paying me, and so my financial basis is not going to be eroded. And yeah, that's why I like dividend paying companies, but that's also why I not solely focus on them. And you heard my 2 cents. Please let me know your opinion in the comments, and have a nice week, and it feels good to be back. Bye bye, have a nice week.